We'd like to welcome everyone to the first installment of the new Mountain West Small Business Finance Masters in 504 Lending. We welcome all of you on the call today. Let's see. So we do appreciate your taking the time to visit with us and to come to this session today. And we hope that you'll be able to find the time to join us throughout this series this year. We are recording the sessions for reference. You'll be able to access those later on our website. So anyway, thank you for your time. My name is John Evans. I'm the president and CEO of Mountain West. It's my pleasure to be the presenter today. I've been with Mountain West for just past 26 years. My previous experience was about 12 years as a commercial loan officer, largely in the 504 arena back in those days when it was a relatively new product. I've had a lot of success in 504 and because I could see that I could see its tremendous benefit for the bank, the borrower, as well as the economic development and job creation. So it's been really the driving force in my whole career, both as a banker and then coming to Mountain West. With experience in credit servicing and as I said, as a banker in loan production. So this has been a big part of my life. I'm very passionate about the success of Mountain West as well as the 504 program. And so it's my pleasure to be able to present this information to you today. So a few things by way of introduction. There is no, this is a completely unbiased presentation, but I say without fear of contradiction that I believe that the 504 is the best commercial loan product for a small business that needs to acquire fixed assets and working capital. But as we all know, 504 comes with its own unique set of complexities and rules. I remember back in my banking days that the CDC just kind of took care of all of that behind the door. I would just hand them a package and they took care of it. And yep, the authorization would come bouncing back with really at the time it seemed like very little trouble. Feels like those times have changed and the SOP is gaining in complexity, and we feel like it's important to educate our bankers in the SOP and all the rules so that it's easier to navigate this path. So we believe that when the lenders and the borrowers understand well the 504 program, it's not only easier to deliver to the borrower, but it's also it also creates a greater demand for this product, because once people see the real benefits of this program, they'll take advantage of it. Borrowers see that very quickly. It's a benefit to the bank, and again, to our purposes as a nonprofit lender. So in order to, and we have found over our 40-year history that in order for the 504 program to be successful in a community, that it depends on education of the parties involved. And so since its beginning, Mountain West has made a very strong effort to educate everybody on this program. And for that reason, I don't say that in these slides, but for that reason, in the state of Utah as compared to other states, so that would include our competitors in Utah as well, but Utah is second in the whole nation in terms of 504 loans done per capita, which I think is a huge accomplishment. So thank you to all of you for your participation and support of this program. So a brief overview about today's topics. Want to give you an overview of what this series will entail. The nuts and bolts of this presentation are in the production and processing area. We're going to talk about some best practices. And then kind of an unusual item, this 504 lending cap issue. We don't usually bring these things up with our banking partners, but this one is of such importance that I felt like it was necessary to give you all this knowledge and tell you the circumstance here with the 504 lending cap. And then just to give you an idea as to future Mountain West events. We're very much an event-oriented CDC, and we are certainly very hopeful that the door's opening, that we can be more free with these events in the coming year. So, an overview of our series. This is the first time we've done this as a formal series, and hope to be able to repeat it in years to come. Now, this is the set of topics that we would like to discuss. However, I do reserve the right or the ability to change and adapt this as time passes. We'll let you know a month ahead of time with each session what is to be presented. But as you can see here, there's some topics of supreme interest that we really feel like our banking partners need to understand well, particularly the eligibility, affiliation, and some of the refi stuff. This is some really important and complicated stuff. Like I say, back in my day, the CDC didn't need to involve me. It was much more simple, but now it's complicated, and you folks really need to have an understanding of this stuff so that this process can go easier and faster. Okay, so let's move on to the production and processing, and you know, I kind of feel strongly that we are your partner. We're a vehicle. We're a mechanism for the banking community and these borrowers to access 504. So I feel like, as much as we can, we need to be transparent and open as to what is happening at Mountain West, what we're doing, how we're doing it. We are always open for suggestions and input on how we can do it better. So as you all know, 20 and 21, we were confronted with some pretty massive increases in 504 volume. Some of these pictures here are not unlike what I think some of our people felt during this time. And to give you a picture of what we encountered, I've just kind of spread out our loan production for the calendar years ended September 30 for 2019 and 20 and 21. So you can see we've gone from 189 in 2019 and the 233 loans approved in 2020. Now this is, around 200 is kind of where we've been, and 2020 was a pretty big increase, particularly with some of the CARES Act stuff that forced some deadlines, created some artificial demand points. And so that was about a 23% increase in 2020. 2021, it just skyrocketed to a 40% increase in loans approved over the previous year. Now this 326 is far and away a record level of loan production for Mountain West in any of our 40 previous years. So a big deal. And so I've given you, and that represents a 73% increase in our volume from 2019 to 2021. So that's a big deal, when you have a set staff and a set process. Just to give you an idea, so far this year, our interim at 4 months ended January, we're still an increase over 2021, about 8%. So the volume surge continues, and I felt like it was just very important for you guys to be able to see this and get a picture for what we're dealing with. On the far right, we take a lot of pride in this. There are about 200 CDCs in the country, some in some very large markets, Florida, New York, California. And yet with a state the size of Utah, we rank currently number 9 in the country. We've always kind of been between 7 and 9. At one point for a brief time, we got to number 5. So I think this is a testament as to the penetration and the ability of Mountain West to deliver this product. So a big thank you to all of you for helping us accomplish that. Okay, so back to the loan volume surge that we experienced the last couple of years. To be perfectly frank, our tried and true 40-year-old model was not really suited to meet that demand. And so, frankly, we did have some response and turn time challenges. We were operating at levels that we were not accustomed to. So we reacted. You know, we have done some very major, unprecedented changes at Mountain West in 3 basic areas. Number 1, we've increased our loan origination staffing to unprecedented levels. We've created a loan pool processing model, which is just completely flipping our whole process upside down and creating a much more efficient workflow so that everything is more evenly distributed. And then we're also developing a set of best practices. At the volume levels we were at before, you know, we could just kind of do things and it worked. But at these volume levels, we've made a concentrated effort to develop some best practices in the interest of creating greater efficiencies. Now, we're going to talk about each of these in a little bit of detail here. But the thing I want to point out and emphasize on these best practices is that these are best practices for us, but I'm looping our banking partners into this because we need your help in implementing these best practices. It's kind of a help us help you thing. So anyway, let's talk first about our staffing. First of all, our loan officer staff. Numbers of officers that we've never had before. I wanted to give you the list so you see where everybody is. Our newest addition is Curtis Singleton. Lives in Ogden. He's remote. Curtis does not have an office per se, but he's attached to our Salt Lake office because our volume there has been so phenomenal. I do take this opportunity to let you know that we're looking for another loan officer, probably someone of a little less experience. And this will be specifically attached to our non-Utah markets. Now, one thing I want to emphasize very strongly here about our marketing approach, and that is that while all of these officers are located in specific areas, Salt Lake, St. George, etc., there is no mandate or requirement that if a loan is in a particular geographic area that you use the officer that's in that area. You can have a project in St. George and have Tyler Healy out of Logan do it if you want to work with Tyler. Jeff Van Cherry and Orem can do a deal in Logan if the relationship with the banker is such that that's the best fit. So we do not have, while they have a primary marketing responsibility for these areas, it is not mandated that you have to use the officer in a particular area. You can use whoever you want to do your loan. This is just to lay out our market areas. I'm not sure all of our banking partners know all the places that we operate in. We're statewide in Utah and Wyoming. And we're in what the SBA calls local economic areas in all of the counties that border Utah. So Colorado, Northern Arizona, Nevada, and the southeastern Idaho counties. We can do loans in all of those areas without having to get permission of the CDCs in those states. So we do have quite a large market area, and just felt like you guys needed to be aware of that. Now, the loan origination specialists or loan processors, if you will, who are primarily tasked with the data entry and the submission of loans to SBA. This is we've made some very large increases to this staff as well, because this submission process to the SBA is complex. It's detailed. You have to match a lot of things up. There's a lot of data entry that has to fit perfectly. And so we've expanded that staff. And again, back to this pool environment, none of these assistants in our previous model, they were in effect married to specific loan officers. Now we've divorced them all. They're all out there in their own pool, and loans come to them according to need, so it creates a more even workflow. One small thing that we would ask, we know that in our previous way of doing business that you would be inclined to reach out to a loan assistant to find out the status of a loan. We ask that you don't call the loan specialist. Please direct all of your inquiries to the loan officers. This enables the specialists to keep their heads down and get all this detailed, complex work done. Underwriting. We have an underwriting staff that has also increased. Robert Edmister, been with the company for 35 years. Many of the older bankers will know him from his origination days. And then we have another, a remaining staff of very experienced and capable people to help us with this. Now you'll notice that this staff is somewhat smaller than our loan officer and loan origination specialist staff. So we are trying to still expand that, and we've got an active job posting for underwriters. So please keep that in mind if you know somebody that may have that interest as an up and coming credit professional. Again, with respect to loan updates, again, we ask that you refer to the loan officer and let the underwriting staff continue to focus on getting these credit memos prepared and doing the credit analysis. And finally, closing. Another part of our origination staff that has increased in the last months. Very capable staff, very experienced, that we place a lot of confidence in to take care of the loan once the authorization drops. Okay, so let's talk about this pool arrangement that we've made. Again, we've transitioned from the partner format and created the loan pool. This spreads the work equally among the specialists and eliminates the log jams that we'd experienced previously, especially with our busier officers. They would be jammed up so much with more loans that they couldn't react, and things would get missed or delayed far too much. Now that that's in a pool, it's more evened out. Again, as I mentioned, they're off the phones so that they can focus on getting this data entry right. And as you all know, it used to be back in the day that when the SBA screened out something, it would be a couple of days, you turn it around and they'd get you an answer. But now screen outs take anywhere from a week to 2 weeks to respond to. So it's really critical that these folks get this submission element done as close to perfectly as possible. We've made the job descriptions and roles uniform. So it really doesn't matter. Whoever gets it, everything is done the same way. It's like you go from one McDonald's to another, you get the same hamburger. We want that to be the same experience at Mountain West. And this is still, we've had this in place for several months now, but we continue to meet on a weekly basis to review this process, to tweak it, to talk about the little things that we need to upgrade and modify and change and work out the kinks. So I'm really very excited about this. I think this has been a major improvement in the way we do business. And again, feel like we want to kind of open the gate to the backyard so that you can all see how we're doing things and the efforts we're trying to make to take better care of our lending partners. All right, let's talk about best practices. Now, this is going to be a recurring subject on some level throughout this whole series. In fact, I think we've slated one of them to be entirely about best practices. And the point I want to emphasize here is, normally best practices would be just a conversation between me and my loan officers about how to do their jobs better. Well, I'm inviting all of you into this because if the lending partners are all aware of these, we can invite you to participate with us in doing these in doing these best practices. If you understand what they are, you're in a better position to help us accomplish it. So it is kind of a help us, help you thing, if you will. So a few of these best practices I'd like to share with you today. The first one is, please submit a complete and accurate package. In the past, we were able to move ahead with a partial package. We could kind of move ahead with it, but in an environment like this, we really need that package to be as complete as possible before we can move it through the assembly line in a meaningful way. So we ask you to, when you get that application package from us, to really make the best effort with our loan officer to get that package as complete as possible. Now, this second bullet point here about accurately representing the documents, we have the application forms, but then there's documents. And we found with some amount of regularity that the documents provided by a borrower sometimes don't match up perfectly well with the application form that the borrower filled in. And that creates confusion. So that's one thing we're asking our officers to double check and make sure before we move too far, is to make sure that what's filled in on a form is accurately, is representative of the document. Secondly, early loan application pre-screening and planning. The best practice that we're implementing with our officers is that we ask them upon receipt of a package to carefully review that package in detail when they prepare the needs list, to assess the structure, to do some quick creditworthiness screening, eligibility, all of this before they hand it off to underwriting to run with it. We want to try to expose the landmines, if you will, early, rather than getting a month down the road and finding that there was something we could have seen in the first few days. So this is a big deal with us, and I'm pressing my loan officers to make sure that they do this. Now, here's kind of a new thing. This second thing, and this is one that does involve our lending partners a little bit, and I, maybe we need to ask you to help keep our officers on track with this. But I think we found that once our officers had a chance to review a package and to, look for the issues that may be there, it's very beneficial for the lending partner to meet with our loan officer, take an hour and walk through all of the details of this, look at the timelines, the REPC deadlines, the timelines on our internal approvals and our submissions. Let's try to set kind of a timeline. But this is also a time to look for potential issues about the ultimate probability of approval. You know, it's a time to really look at the eligibility. Do we have credit elsewhere issues? Do we have size standard issues? Sorry. Got a hair trigger on my mouse here. This is the time to look for all of these landmines. And then finally, this last bullet point, there are a number of things that take time to figure out. And we really don't want to be looking at them too late in the process, like franchise, environmentals, appraisals. Life insurance is one. We really should be determining in those first few weeks if there's going to be a life insurance requirement, because it just takes forever to get this to the life insurance company if a new policy is needed, especially tenant subordinations, et cetera. So let's, I'm asking my officers and our partners to make a point of trying to have this early conversation about identifying these time-consuming issues and these landmines so that we can not have to have a late arising problem. Some more best practices. We find in some cases that our lending partners are resistant to letting us have direct communication with the borrower. I understand that, but we really do need to be able to contact the borrower directly. That helps us in some cases with some of the questions we have to get the answers that we need. And it helps us to have a better line of communication for managing the expectations with the borrower. Plus, keep in mind, we're embarking on a 20 or 25-year relationship with these folks, and we need to establish early a strong relationship with them. It's a little disheartening that and maybe a little humorous that in some cases we get all the way to the closing and a borrower doesn't even know who we are or what role we play. And we just need to be able to have the access to the borrower early so that we can establish that relationship and enhance our communication. So we do ask your help and cooperation with that. Another one, this seems simple, but when you send us documents when you send us documents, give us a call after a day and just make sure that the loan officer got it. They're busy and sometimes things can get buried in a flood of emails. So just call us to make sure we got it. And I'm asking my loan officers to do the same when they send you a needs list or any kind of a package that's important to the transaction, that they call you and make sure you got it. You guys are busy too. So I think this email phone call coupling is an important thing that will help us to make sure that we don't waste time, because too much time can get wasted over needless loss of a package or a misplacement of an email. Now, when an authorization is issued, another one is that we think that this is another good time for our lending officer and the lending partner to have another conversation about the terms of those authorizations. Now, most of the time, there's no surprise, but once in a while, the SBA will put something in there that we did not recommend. And so we need to make sure that that communication between the banker and the Mountain West officer and the borrower are clear immediately after that authorization is issued, so that we have a clear pathway to closing and so that we don't have any drama at the closing table. I think most of us have experienced that when a borrower is surprised. Granted, most of the time the borrower was told about stuff, maybe a couple of times during the process, and they forget. But this is another opportunity to make sure that we all communicating in the same page. And then the application package we ask that as much as possible that you use the Mountain West application forms and the SBA forms as much as possible. That helps us to keep a consistent format for the information. as much as possible. So we hope that we can accomplish that. And it's also helpful that when a package is submitted, that we have the personal financial statements and the interim statements dated as recently as possible, because as you know, there's time constraints, and if for whatever reason the application gets delayed, we don't want those to expire and have to get those completed again. All right, now here is a credit best practice, and this really is important. One of the major sources of screen outs from the SBA has to do with projection-based deals, particularly ground up projection things like hotels or self-storage that don't have a history, a credit history. Sometimes we have to do a projection when a business is expanding, but the bigger problem is when it's a startup. If you build it, they will come, kind of a project. So we ask you to, there's some key elements that we need to really kind of try to address if we can. We all know that borrowers are just kind of filling in paperwork, and they don't often want to give us revenues and margin projections, much less the accompanying support. But we really need to know what is driving the numbers they're giving us. If they've got demographic data, competition data, feasibility studies, anything we can do to support those revenues and revenue and margin projections will really help us avoid a screen out later on with the SBA. Post-funding liquidity is a big deal. We cannot make a projection-based deal to a borrower who's broke after the injection is made. We need to have an acceptable amount of liquidity in place. Guarantor or secondary sources of repayment are also a big help if we can have that. And management experience really needs to be supported as much as possible. So please keep these things in mind and reach out to us if you have any questions. All right, so that's the extent of the best practices for today. Again, like I said, we'll come back and talk more about those later or in subsequent presentations. Now, this 504 cap thing is something that is unusual for a Mountain West training session, but the need necessitates that I make this a kind of a common dialogue. Many of you are aware that the 504 lending program on the federal budget has a $7.5 billion annual cap. That limits the amount of approvals that can be issued in a calendar year. And refi has its own $7.5 billion cap. Well, at the current pace, regular 504 is going to run out of fund or budget availability in June, which would leave us without the ability to issue any new authorizations from then until October 1. And so, a potential 3-month downtime with no authorizations is just not a scenario that's in any way acceptable. Refi does not have this problem. We're nowhere near the cap there. Unfortunately, this very much does need an act of Congress to fix. So our trade association, NADCO, is making Herculean efforts to persuade Congress to do something to increase the 504 cap so that we can continue to do business until the end of the fiscal year. This is a challenge now because Congress, as many of you know, is not getting along very well. It's divided and contentious, even at the committee, small business committee levels. They don't get along like they used to. I'm on the board for our trade association, NADCO, and have seen up close and personal how these folks don't get along, whereas historically they always did. And a lot of this is due to the size of that the SBA has become during the pandemic. So we really need to react to this. So here's what I'm asking for. we've got a list of everybody that's attended this webinar. We're going to send out to you our basic congressional letter, so that you can review it and see what we're asking for. And I think all we need to do is ask you to send us back a letter or an email, preferably something on your bank letterhead that will refer to this letter and that will refer to this letter and endorse it or add your comments. And then we'll take all of this correspondence and send it to our congressional delegations in Utah, Wyoming, and Colorado, as well as the committee leadership on both sides, in both houses of Congress and both parties. Congress reacts to volume. And so we're hoping that with all this correspondence, it will help to move that needle. I do feel like I want to report to you that there is some positive movement. We've had some support from the ABA and numerous the Independent Community Bankers Association as well to support this, some kind of legislative fix. And it does look like even the most conservative members are seeing the need to not let this situation occur. It's just to borrow a line from a movie, failure is just not an option. We have to get this done. And so I'm soliciting your help. If you could reply to my email with those endorsements or your comments, hopefully on letterhead. And I might add, the bigger the title in your bank, the better, but we'll take anything that you want to send to us and appreciate your help. Training events, just want to let you know that we're going to continue this throughout the year. And then as we see needs arise, we'll do other trainings as needed. We are a very event-oriented marketing CDC. So this is some of the stuff we're planning for this year. Next month, we're going to be hosting our annual March Madness events at our at these offices. Our golf tournament's going to happen as usual, tailgates in September. And we've got some other things in the planning stages that we want you to know about. So our next session will be on March 24th, 11 o'clock. This is the basics of 504, some intro information, but also some basic tenets of the program. Now, I know a lot of you are very experienced in this program. Might not hurt for a good review, but we would also invite you to invite many of your younger officers or underwriters, analysts, even loan processors, folks that are maybe early in their careers to join this webinar so that they can become familiar with what 504 is, its advantages to the bank and the borrowers. We very much invite you and all of these folks to attend. We think this will be a great session. It'll be presented by Blake Beck out of our Orem office. Okay, please excuse my use of the minions. I think they're a funny and animated figure I like. So at my advanced age, that's a little embarrassing. But like I say in this webinar, I'm being very open and honest with all of you. So anyway, that's the presentation for today. We have a few minutes if there's any questions. Danny Mangum, our Chief Operating Officer and really well-experienced lending officer at Mountain West, is here with me. He's looking at the chat. If any of you have any questions, we invite you to share those.
So just a quick thing here on the chat. Currently, a question has come up about, are we able to finance working capital? So just a quick response here. As part of the refinance program, we are able to give cash out for eligible business expenses, which in terms of that for the operating company truly is working capital. So as part of a refinance, yes, we have some abilities to lend working capital. As part of a purchase, we are not able to do that. That being said, if you do have a project that you're trying to find a home for that just isn't quite bankable, we do have a small loans loan officer, Olivia Leishman Nelson, who administers our SBA 7A Community Advantage loan program, as well as 2 other funds that we control, and we're able to do that in working capital. So short answer there, yes, we are able to do some working capital financing as it pertains to the refinance program, and then also offer some 7A and other loan funds for those customers that aren't quite bankable at your bank. And that's about the only question that I'm seeing popping up, John. So really just appreciate everyone for your involvement. We're excited to continue these, and reach out to your loan officer or any of us with any other further questions.
Okay. No questions. We appreciate everybody's attendance today. You don't hesitate to shoot an email if you have one to Danny or to me. We'll get back to you. And thank you everybody for your participation today.